What's up, guys? My name's Anthony. Welcome to the channel, and as you can see here, we just had a daily close 30 seconds ago above this key level of resistance here. This could be the start of an upwards breakout that we've been waiting for. And as you noticed in this thumbnail, during this video, we're going to tackle a very important issue for all investors, and that is how to diversify and what you should be owning right now during the most uncertain economic times in certainly my lifetime, and depending on how old you are, potentially your lifetime as well. But before we get started, I just want to tell you a little bit about what we do here and ask you to subscribe to the channel if you're not already a member of our community. So on this channel, we help you safely navigate the ups and downs of cryptocurrency. And yes, we do believe cryptocurrency and digital assets are their own asset class. Today, we're going to talk about a 60-40 portfolio, being equities and debt-based assets like bonds, and CODs, and savings accounts, right? But there are other types of assets, and we certainly believe here on Crypto Ride that cryptocurrency is an up-and-coming asset class. So today we've got a Forbes article that I want to look at with you, and it's entitled, "A Bedrock Approach to Asset Diversification is Failing. Bitcoin may have the answer." So what we're talking about here is the 60-40 portfolio, and as I mentioned in the introduction, this allocates 60% of an investor's investments to equities like stocks and whatnot, and the balance placed in debt instruments like bonds. The most popular one is bonds. So if you take a quick look here, like this is what a traditional financial advisor might recommend to you. And of course, these ratios will change based on your age. Of course, if you're closer to retirement, if you don't know this, the idea is you own more percentage in bonds because they're less risky, right? And the younger you are, the more stocks and equities you would potentially own. But is that enough, I ask you? And in my opinion, the answer is certainly no. I am a big proponent, as you guys probably know if you watch my channel regularly, of a diversified portfolio, which not only includes these two basic things, but also I'm a big fan of collectibles, I'm a big fan of real estate, and naturally, cryptocurrency. So the rationale behind the 60-40 portfolio is to capture the gains when equities rise, so when stock markets are soaring, and rely on appreciating bond prices to protect their downside when markets correct. So it's hard to argue with the results because historically, this has generated 10.2% in the US since 1980, but these are not normal times. Why aren't these normal times, right? So first of all, we've got an election year. Second of all, and maybe I should have said first of all, we have a pandemic on our hands. And the pandemic has caused the government to print trillions. I believe the total is $3 trillion with another stimulus package on the way, which could help in the short term, but it is running up the national debt exponentially. And the result of that is that interest rates are at historical lows right now, giving you horrible returns on things like bonds and money market accounts. So where are investors to turn? That is the question. If both debt and equities are going up at the same time as they are right now, debt itself is going up, right? And the stock market's also going up, right? Nothing makes sense right now. They could drop in parallel as well. This level of risk is untenable and forces investment advisors to look for new and creative solutions to diversify client portfolios. Enter Bitcoin. First, you can make the case, and I'm just going to read here because this is just some really good information. First, you can make the case that Bitcoin has never been healthier. Its 100-day volatility reached a 23-month low of 0.28% on Sunday, and it's been a record 75 days now, or 76 really, since Bitcoin closed below $10,000. So I just want you to think about that. It's been 76 days at this point, because this was written a few days ago, since Bitcoin has been below $10,000. And if you think about that, it hasn't really been much higher. I think we touched 12 once within that time frame, but we've really been seeing steadiness and predictability from Bitcoin of the likes we haven't really seen in the past. And this is something that could make institutional investors and governments really more accepting of Bitcoin and cryptocurrency as an asset class over time. The most impressive aspect of these feats is that this number takes into account several pieces of negative news, such as a 300 million crypto exchange hack and the indictment of 4 key executives from a leading derivatives exchange. And in addition to this, 2 commonly used metrics to gauge the health of the network, including hash rate and the number of active Bitcoin wallets continue to increase. So let's just take a look right here at the hash rate. You can see we are near all-time highs, and with a high hash rate comes security of the network. And here are the active Bitcoin addresses. You can see we are near all-time highs, but certainly have not slowed down at all in 2020. It's been a pretty impressive thing. In addition to that, there is less Bitcoin historically being stored on exchanges, which if you watch my channel regularly, you know that's a big deal because that means people are holding in cold storage and people are thinking big picture in long term like I am, and potentially like you are. So if all these factors are in place, you got the uncertainty in the world, right? You've got everything we just talked about with Bitcoin holding steady, high hash rate, high active wallets, right? Decrease in volatility. And now I want to show you this piece of news, which you probably saw if you pay attention to cryptocurrency. But if you didn't, it's huge news, and I definitely want to include it in this video. But Square, the company, the fintech company owned by Jack Dorsey, they bought $50 million worth of Bitcoin, saying that cryptocurrency aligns with their purpose. So check this out. Payment company Square is buying a large block of Bitcoin, an unusual use of corporate cash. They're using corporate money for this, cash reserves. And on Thursday, they bought 4,709 Bitcoins, which is approximately $50 million worth. This represents about 1% of Square's total assets as of the end of second quarter of 2020. Square believes cryptocurrency is an instrument of economic empowerment and provides a way for the world to participate in a global monetary system, right? Because cryptocurrency is global. Bitcoin is not really, it doesn't have a country, right? It's a global financial network. And this aligns with the company's purpose. So the question then remains, what assets are the best ones to own right now in 2020, heading into these uncertain times? My philosophy on this is you want to be diversified. I think at this point in time, it would be foolish to not own a little bit of gold and to not also own at least a little bit of cryptocurrency. If you do not own any Bitcoin right now, I have a link, an affiliate link to Coinbase, all right? And my best advice if you're just starting out or considering buying Bitcoin for the first time is you just buy a little bit. So many people look at the price tag of Bitcoin and just shy away from it because they just say it's too expensive. Like, oh, like I've heard my friends say this time and time again. Bitcoin is, you know, it's worth $10,000 right now. It's worth $11,000. I'm not buying a Bitcoin. Well, you don't have to buy a Bitcoin. You can buy an eighth of a Bitcoin. You can buy $100 worth of a Bitcoin, right? And just start stacking Satoshis, as everyone always says, stacking sats. Right? So it doesn't have to happen instantly. It can happen slowly. And I'm not here, and I will never be the crypto YouTuber to say that you should have 50% or 75% of your portfolio in Bitcoin and cryptocurrencies. But I will sit here and tell you that I think it's irresponsible to not have at least 1 or 2, or really up to 5 or 10% is really what I always preach on this channel over the last couple of years since I've been making these videos. And you can go ahead and put some of that into cryptocurrency. Why wouldn't you put more than that? Because there's no need to. Because if cryptocurrency booms like it has in the past, just 5% or 10% of your net worth is going to be enough to make you a lot of money. Do me a quick favor and just give this video a like. That will help the video get into the eyes and ears of more viewers here and really help the channel grow. Thanks, guys.